classes. Hi, Melissa. How are you today?
I'm doing wonderful. Thanks, Misty. Great to see you again.
You too. So today we're going to talk about the fun topic of student loans. So I'm Misty Cabaniss, and welcome to my YouTube channel, Live, Earn, and Play in Central Florida. And I'm known as the realtor that Jeeps. And this is Melissa McGlinchey with Premier Mortgage. And we're just going to have a conversation about student loans because I'd say probably about 50% of the people that come in contact and with me and with you, Melissa, have some sort of student loan debt, and they're just not sure what to do about it. And they definitely, when it comes to buying a house, need some guidance on that. And as we always tell them, the time, whether you're considering purchasing in 30 days, 60 days, 90 days, the time is to start now, getting with someone like Melissa so that you can take a look at and kind of dissect what type of program they're in and and what direction they need to go.
Yeah, absolutely. Great points there. So here's the biggest thing about student loans is a lot of people, especially with COVID, have thought, well, I don't have to make a payment on it. So they really don't even think that about the student loans right now because they think, oh, I'm not making a payment. However, that actually ends up working against you when you're not making a payment. And that's probably the number one thing for people to understand. So what happened during COVID is everyone got deferred. Okay, so deferred means you don't need to make a payment. You can if you want to, but you're not being charged interest and you don't need to make a payment. Well, when that happens, if you go to apply for a mortgage, every single program is going to hit you with a payment because they have to create a payment because guess what? Eventually, you're supposed to start paying back the student loans. Okay. So what they have to do is they have to create a payment for you. Now, if your payment on your credit report shows 0, what we do is we have to hit you with 1% of the balance as a payment. What I did during COVID was I would tell people when I was working up their pre-approvals and getting them qualified, sometimes that 1% took them over the top to where they didn't qualify. Mm-hmm. So I would have them call the student loan companies and ask them to get put on an income-based repayment plan. And when they did that, 9 times out of 10, that payment's much lower. Okay, that payment ends up being much lower than me hitting you with 1% of the balance as a payment. So they get set up on an income-based repayment plan. Yes, that means you do actually have to start making the payment at that point in time, but it allowed them to get qualified to now be able to purchase a home where 1% of the payment kind of took them over the top on that debt ratio. So that's something that we look at. You mentioned people, reaching out to me, getting pre-approved. Now's the time, even if they're not looking for 6 months down the road. I've got multiple people that I'm working with right now. They're not looking for 6 months or 12 months down the road, but they want to make sure that once they get to that 6 months that they're ready, right? And so they submit an application, we review their credit, we review their file, and I let them know that the steps that they need to take if they're not able to qualify right now at this point in time. And that is the case quite a bit. There's just little things that we need to do, but always a good idea for us to do that together because what I tell them they need to do isn't necessarily always what they thought they needed to do. So those things can be a little bit right. We have in our own mind, oh, this is what I need to do that has to do with my credit. That's not always the case because our underwriting guidelines, here's my funny statement. So I always say that in the US, we don't do common sense lending, okay? But there's underwriting guidelines for every single program and they can change on a continual basis. And so one of the jobs of a good loan officer is making sure that you're staying on top of those underwriting guidelines. We literally have hundreds of guideline changes every single year. And so we have to continually read and stay on top of those guideline changes to ensure that when we're working with a client, we're looking at all those tiny little things that could pop up. Okay. And so we're reviewing that with them, going over that with them, and making sure that they're good at the point in time that they go to qualify.
Yeah, you brought up an excellent point, because what someone has in their mind of how they feel they need to address that, especially if you're coming from the position of looking to buy a home, is really not the path that they need to go on. So it's really important that they get with you so that you can review their credit and review the loans, that the programs that they're in, and and make sure that they're going to be on the right path for when they are ready to buy a home, whenever that is. But the time to start is sooner than later. So can you talk a little bit about people saying, oh well, my payment is being deferred, or people are in some types of programs where they don't have to temporarily pay their payment. And I think you may have touched base on that a little bit, because they'll come out of that program and they'll start having to pay on it. Is that correct? Is that what you said?
That is correct. So deferment just means that the payment is deferred. It doesn't mean it's gone away. Mm-hmm. It just means that it's deferred for a period of time. When people first graduate college, their payments are deferred for 6 months. They don't need to make a payment. I believe that's 6 months for 6 months after they graduate college. And then they have to eventually start making payments. But if they go for their master's, then it gets deferred again. So you've got different periods of time when you're not required to make a payment, but you can make a payment. Now, when COVID took place, everyone in the United States, everybody got deferred. Okay. Right. Whether you were in college or graduated college, everybody was put on deferral status, saying, hey, you don't have to make a payment, but you can if you want to. So one other thing that I didn't mention yet that I really feel is very important is student loans and collections. Okay.
Yes.
Every single program will not finance you if you have student loans and collections, not even the alternative programs. Okay. So it is very, very important not to allow your student loan to go into collection, because once it goes into collections, it is very difficult to get it out of collections. You cannot get financed when it's in collections. Okay.
Very
so
good point.
Collections means you were supposed to make a payment and you didn't make the payment. It doesn't mean you were deferred. It means you are actually supposed to start making payments and you didn't. Okay. And when you don't make payments on something, that company is normally not very happy that you didn't make a payment to them. So what they do is they send you to what's called a collection company to try to collect now on that money. And that's when you get all the phone calls and the emails and say, hey, you owe money, you owe money. That's when it goes into collections. Student loans cannot be in collections in order to get financed. They can be deferred, then we hit you with 1% of the payment, 1%, but they cannot be in collections.
Okay. Well, that's excellent information. Just having someone understand what that means for them, as far as if they were purchasing a $400,000 house, and they can refer back to our debt to income ratio video on that as well, so they can know about what type of percentage they're looking at coming from their student loans, and then their other debt to income ratios, that both of those things are included. And debt to income ratio is going to include things like your student loan, your car loans, anything that gets credit reported to the credit bureau.
Correct. And like I mentioned, a lot of people think that, well, I'm not making a payment on my student loan, so how is that affecting my debt ratio? I don't need to make a payment. So it's really, again, I can't reiterate this enough in saying, if you have student loans, even if you are not required to make a payment right now, we have to hit you with a payment. Okay. Mm-hmm. So that's where, and let me give an example. So let's say $30,000 in student loans. That's not uncommon. That's really low for what I see.
Oh, okay? Yeah.
So if you have $30,000 in student loans, I have to hit you with a $300 a month payment. Okay. So that's like you're taking on an auto loan. Right. And so you have that additional monthly payment I have to hit you with. Whereas if you got on an income-based repayment plan for that, most people in the US, that payment might be around $80 to $100 a month. That's the difference of being on an income-based repayment plan compared to me hitting you with 1% of the balance as a payment.
And explain a little bit more about what you just said, the income debt repayment plan.
Yeah, income-based repayment plan. So it's called
Income-based.
IBR, income-based repayment. So when you call the company that has your student loan, you ask them and you say, hey, I'd like to get on an income-based repayment plan. Okay. And what they'll do is they'll ask you to send them your tax returns or your W-2s or your 1099s, however you're paid for the last year or 2 years. And then they work up where your payment would be at.
And this is to the company that holds your student loan. Okay.
Correct. Whatever company holds your student loan is who you're going to call to get set up on the income-based repayment plan. Now, I know that there's a lot of automation these days, and sometimes you can go into their system and you can upload these items, and then it'll take them a couple days and they'll spit back what the income-based repayment plan would be. So you don't necessarily have to call them. I always tell people pick up the phone and call them because you can get it done kind of right there on the spot while you're talking with somebody on the phone, as opposed to trying to wait for things to go through the system in order for someone to get back to you. But there are multiple ways, and every system is different depending upon who your student loan is with. But everybody functions the same way with income-based repayment plans, deferrals. It's all very highly regulated.
So will this reflect on a statement that they receive? What documentation is it that you're going to need once they go this route?
So good question. They're going to get a document and they'll receive a document that states, okay, here's your income-based repayment plan. Here's the dollar amount. The first payment's going to start July 1st. Okay. And as of July 1st, you need to pay this amount of money every single month. So they're going to provide me that document. If they're looking at getting financed right now, I can use that document to override what their credit report says. Okay.
Okay.
If they're looking at getting financed in the future, okay, and they're maybe 3 months away and they're going ahead and getting set up on this income-based repayment plan, they don't necessarily need to give me that document because eventually their credit report is going to update.
Okay, that was going to be my next question is, does this reflect on their credit at some point in time down the road that you will be able to see that as well?
It does. It does. So every creditor within the United States sends a report to each bureaus. We know there's 3 bureaus, right? There's Equifax, there's TransUnion, there's Experian. Those are the 3 bureaus. Every single mortgage company nationwide pulls reports from those 3 bureaus. So what happens is each creditor sends an electronic tape once a month to each of those bureaus. Now, they don't have to send to each of those bureaus. So I want to preface with that. That's why everyone gets different scores. They're like, well, how come this says my score is 624? And how come this one says my score is 680? And so so companies, lenders pay to report to the bureau. So when I was in the bank, okay, and when I say when I was in the bank, I was in a physical retail bank. I was vice president for a bank. And so I decided how many bureaus we wanted to report to for the people we gave loans to. I did not report to all 3. Okay. Right. So what that meant is if I'm reporting to just Equifax, you still have TransUnion and Experian. Mm-hmm. Now, if I'm reporting to Equifax and you are doing great on your payments and you're making your payments on time every single month, then you're going to have a good score for that item that I'm reporting to. But let's say there's another company that reports to one of the other bureaus I'm not reporting to, and you have a late payment with them. That's going to take that score down. And so that's where you can have scores that really vary quite a bit sometimes.
Right.
Okay. And it just means that not everybody reports to every bureau. That's why we pull all 3 and we use the middle score for qualifying and for pricing.
And that's an excellent point, because when people come to us and say, oh, my credit score is this, well, that's not actually a true credit score, because they're only getting information from one. And even if they do have, because you can get your credit report, a free credit report once a year from each one of those. But when a lender looks at that, they're going to pull in all the factors from all 3, and they're going to come up with a credit score. And that's why it is so important for people to get with you to get what a true credit score is.
Yes. I just had a lady yesterday I was speaking to on the phone, and she said, oh my goodness, Melissa, I don't understand this. I've been working so hard on my credit for the last year. I had these things, and she uses a certain credit company. Okay.
Yes.
She doesn't go to the 3 bureaus separately, and she uses a credit company for monitoring. And she said, well, these items had fallen off and I didn't see them on there anymore. And then all of a sudden they pop back in. Well, it probably means that they sold to a collection company. And now that collection company is now reporting to the bureau that the other company wasn't reporting to.
Right.
So that's why it is really important. Get with someone ahead of time. Get with a loan officer like myself. Hopefully it's me. If it's not me, it's okay. So
Right. Get with somebody that you feel comfortable with.
Yes. Yes. And see exactly where you're at and make sure, that you're ready. Or is there anything that you need to do? Or you think, okay, I don't know if I'm ready or not. I know I've got some credit issues, right? And so you think you're just going to handle those on your own. No. Get with a loan officer, have them do the application, have them pull your credit, review with them. So this way you have an exact game plan. Okay, if I do this, this, and this, I'm going to be where I need to be by this period of time.
Yep. And the application process, because I know sometimes we get people and they're, that seems like a scary thing and they're hesitant on filling out the application. And the application really is super simple. And especially if you're a W-2 employee, I mean, they need their, 3 months bank statements and 3 months of paychecks and their tax returns, correct?
Yeah. So the reality is when they complete their application, okay, the most important things that we're looking for as a lender, because I can go in behind and we're going to change and edit almost everything in there. Because as we start to receive their documentation, we clean up their file and we clean up with exact figures. So when it comes to them putting figures in the application, I don't really need that. Because when I review with them and when I obtain their documentation, that's when I'm going to get it. So what we need from them is we need name, address, social security number, date of birth. Last 2 years of living residence history. Do you pay rent? Do you not pay rent? Do you own? Do you not own? Okay.
Okay. So it's super simple. It's basic information that most people, have on hand and can do just, sitting in their car, filling out your application digitally.
Yes. And people sometimes will call me and they'll say, well, I don't really know what to put for my income. They're self-employed. I don't want you to put anything for your income if you're self-employed, because guess what? I'm going to calculate it. Okay.
Right,
once I receive your tax returns. Or they say, Melissa, I don't have my bank account information on me to know my balances. I don't care at this point in time. Tell me what your average balance is that you normally carry. Right. And then once I get the documents, I clean all of that up. So I always tell people, I use the terminology, don't be so anal when you're completing your application. It's okay. Anything you do, sometimes they're so freaked out. Oh my goodness, I made an error. It's okay.
Yes.
It's okay. I edit anything in that application once you submit it.
And that's extremely important to let people know, is because especially if they've never done anything like this before, like you said, they really feel that that's set in stone and they have to fill out everything perfectly. And one thing else that I'd like to add is that you're not pulling their credit when you do that. Like, you're just looking at their expenses and you're going to get to the credit part later. And the more forthcoming and the more truthful, to be honest, the more truthful someone is upfront about their situation, then it's a lot easier for you to help them. And so when you do get to the credit part, there's no skeletons in the closet. Not to say that can't happen anyway, because unless you're someone that's checking your credit very regularly, which a lot of us don't, I mean, there's things on there that, you may not be aware of, and they could be yours or they may not be yours. But not to get off track, but the point of this is that fill out the application. It's not a hard process to do. If you have questions, you can reach out to me or you can reach out to Melissa. We're always just a text away, and we're super happy to help out.
Absolutely. That's biggest step number one. Just complete the application. The reality is it should only take you about 10 minutes to do.
Awesome.
Yeah. And then any questions at all, I always tell people, I don't care how late it is in the evening or how early in the morning. If I'm up and I'm available, I'm going to respond. If not, when I'm eventually up, then I'll respond.
Right. Likewise, because we get text messages at 2-3 o'clock in the morning.
Yep.
And if I happen to be up, I'm probably not going to respond because I'm trying to go back to sleep. All right, Melissa. Well, great information today. Hopefully this clears up a lot of questions for people, and everybody's situation. It's specific to them. So just feel free to reach out. As always, I'll put both of our contact information right here on the video. So super easy to get a hold of us. And thanks so much for all the great information today, Melissa.
All right. Thanks for having me again. Good to see you.
You too.